smart move by Apple to sell $7 billion in debt despite having a $200 billion cash pile?
Yeah, they have some debt already on their balance sheet, so I think it makes sense for them to swap out a little of the debt. I think they had it at 4.25 before, and now they're getting it close to 3, so that makes a lot of sense. I wouldn't extend that to draw too many implications for the stock, though, Morgan. I mean, Apple's given its buyback targets and dividend targets based on a net cash target, right? And so this doesn't change the equation for net cash. All right.
Shares are trading around $212 today. They're up almost 2% in this broader market rally. You got a $185 price target. Why?
Yes. Well, first, I think Apple's benefiting today from the China news, right? They've traded more with more volatility than most on the China news. So I think that's what's going on today. I think, secondly, I'm a little less optimistic than most, I think, on what multiple we should be paying for Apple here. Apple's 5-year trading range tends to be in the 13 or 14 times. In some ways, it's a better company than it's been because the services mix is richer. But in other ways, it's not as good of a company as it's been because its iPhone user base is not growing as rapidly. So I'm not as willing to extend the multiple that we assign Apple too much beyond its 5-year range.
Jeff, what about this argument, though, that all of the doom and gloom around Apple should be priced in at this point? We know now that Apple can survive ho-hum replacement cycles. We know even that this next iPhone cycle isn't expected to do that much, and that next year we expect to have 5G. And unless the Apple customer base does the unthinkable and abandons Apple for Samsung just to get a 5G phone, when the 5G networks aren't really completely up and running yet, I mean, now's a good time to buy. What about that argument?
Well, I think the first point I would mention, John, is that we have to be a little bit careful about that December quarter. A ho-hum refresh, I think, is priced in, but I think there's some risk that it's a little bit less than ho-hum. Apple obviously guided up for the September quarter. Part of that's on wearables. Part of that is on iPhones. We suspect, both given our demand work and our supply work from my colleagues in Asia, that some of that is inventory fill, and that means that the demand really won't be there for the subsequent quarter, the December quarter. So we think that there could be a hole for the December quarter revenue in iPhones.